Markets are unusually quiet, and that silence is speaking volumes. As we begin this new week, both traditional financial markets and the crypto sector are showing signs of hesitation. Bitcoin hovers near $97,000. XRP is holding at around $2.15. But behind this apparent calm, a storm may be brewing. Why is the crypto market stalling? What's causing the dip in investor confidence across global indices? And why is everyone watching this Wednesday? The answer lies in two major developments that could reshape the financial landscape in just a matter of days. First, we have an upcoming decision from the Federal Reserve expected this Wednesday. This announcement could impact everything from interest rates to institutional risk appetite, especially as inflation concerns linger and recession fears mount. Second, we're still awaiting a potential trade agreement between the US and China. Spoiler alert, there isn't one. In fact, President Trump stated yesterday that China is not cooperating, effectively shutting down any optimism for an imminent deal, and the consequences are already being felt. US equities are pulling back, crypto is correcting, and public sentiment is deteriorating. According to fresh data, 72% of Americans now believe a recession is likely within the next 12 months, the highest figure in 2 years. Consumer spending is expected to drop sharply, and that decline in demand could trigger a cascade across global markets, especially if the US, the world's largest economy, slips into a contraction. But the headlines don't stop there. In an aggressive move, President Trump just imposed a 100% tariff on all imported films into the US. A symbolic shot at cultural exports, sure, but also a signal that tensions between China and the US are far from cooling. Trump claims he's fighting for a fair deal, accusing China of defrauding the US for years. Yet every time he speaks, markets tremble, and investors are left wondering whether this pressure campaign is about diplomacy or destabilization. Meanwhile, Trump also dropped another bombshell. China's economy is collapsing, he said. Whether or not that's factual, it's certainly inflammatory and designed to inject more uncertainty into the already fragile global economy. And when global trade trembles, crypto doesn't walk away unscathed. Now, in the middle of this geopolitical turbulence, XRP quietly continues to build. Ripple holds money transmitter licenses across multiple US states: Alabama, Alaska, Arizona, Colorado, and more. Despite the legal battles and political noise, Ripple has secured a regulatory foothold. And that matters, because when the dust settles, when the ISO 20022 transition is complete, when regulations are finalized, when utility becomes the driver of valuation, XRP is positioned to be one of the few crypto assets truly ready to scale. It's also worth remembering that Ripple now owns Standard Custody, a US-based institutional custodian approved to handle digital assets. That means XRP's infrastructure isn't just being prepared for retail use. It's being tailored for the institutional world. ETFs, custody, licensed remittance services. This isn't speculative hype. This is architecture. Yes, we're still waiting on a resolution of the SEC lawsuit. Yes, we're still watching for that first green light on XRP ETFs. But while the world is distracted by uncertainty and fear, Ripple is quietly assembling the foundations of a global payment network, SO, as we head into a week filled with pivotal announcements. Keep your eyes open and your strategy sharp. Markets don't reward emotion. They reward preparation. That if this perspective helped you see the bigger picture, drop a comment below with your take on where XRP is headed next. And don't forget, the real moves are always made in silence.